Good morning, everybody. Welcome to today's midweek update. We've got a lot for you guys, so strap in, get your questions in, and let us know where you're logging in from. We are streaming all over the place, same as usual here. Um, let us know. Let us know where you're logging in from. All righty. So, first things first. First things first. Let's get the screen up here and going. And let's make this actually sizable for you guys. This is the NASDAQ that we're looking at. The NASDAQ is back to fresh highs. So you might be taking a look at this and saying, man, oh man, this is the time to be pushing the pedal to the metal. Well, this is actually the time when most people get chopped to bits. I know it's hard to believe. I know that it's hard to believe when you see an index like the NASDAQ, or if we zoom out over here and I'll pull up the S&P 500, right? Here's the S&P. This looks pretty good too, right? Pretty close to the all-time highs. How could this possibly be a time when people get chopped up? It's true. It happens. It happens all the time. And the reason why this is an area where people struggle is because you have the NASDAQ, you have the S&P, but you also have this kind of action here on the Russell, right? But price is struggling, price is trying to push higher, then it gets smacked back down, then it starts to look like it's rallying, then it gets smacked back down, wild action, and you're getting action like this. This isn't just isolated to the Russell. This is also happening on your other indexes. It's happening on the NYSE to a certain degree, and it's also happening over here on the Dow. Right, look at that wedging action. This actually looks like a halfway decent bearish setup. So what? Right? Does it really matter if the Dow, with just a handful of stocks in it, is acting like this when we have the NASDAQ, on the other hand, which is hitting a fresh high, right? Far more robust index. This is where most of the stocks that we trade are sitting. So why even pay attention to the Russell or the Dow or any of that other garbage, right? Why not just pay attention to the stocks? Why not just pay attention to the stocks? Well, here is something else to consider here. And let's switch the screen share for a moment. And I'll put on this other screen here. Let me zoom in a bit. Now, this is my weekly playbook. And I have all the different setups that I look for on the weekends that are here. You might notice that most of them, most of these setups from the weekend are in the red. Of the 20 some odd setups from this weekend, only 7 are positive. So what does that tell us? Does that mean that, hey, Mike is a bad stock picker? No. Why? Because, well, for one, I didn't trade the vast majority of these, but two, it's not about does this setup make money this week or not. It's about finding a high probability setup, something historically based that you could not just spot today, but that you could spot again and again and again as we move through time. Then what you want to see is not just which setups work, but you also want to pay attention to how the market is treating those setups as a whole. The reason why is because that's going to give you so much insight into where we're at right now. Sure, there's a couple that did extremely well. TWST did extremely well, for example. We mentioned that one on yesterday's stream. So if you did not see yesterday's stream, go check out yesterday's stream because we spoke all about how to buy pullbacks. But what I did was this was one that I ended up buying, right? And why did I buy TWST? Let me show you what TWST is doing right now. I'm just going to bring this up. Well, if you have questions already, just please type them into the chat and let me know what questions you have so far. But here is the latest with TWST. TWST started this position right here on Monday. Right now, it's up about 24, 25%. This isn't magic, and this isn't because I'm so great, right? I'm just as average as anybody else, right? Just normal person. The only thing that separates me or being able to define this is just having the discipline, the faith, and the patience to wait for a proper setup. To define what the setup is, define exactly what I'm looking for, define what makes a good pullback versus a, pretty so-so pullback. And then when you spot it, pull the trigger. That's it. It's as simple as that. You wash, rinse, repeat. And that's how trading goes from being this nice, entertaining thing that you do while you're bored at work to something that actually produces you money reliably and allows you to leave that boring job if you want, right? There's plenty of people that trade on the side and just do that forever. Stu, one of our coaches, he loves his job. And he actually outperforms me most of the time. And he still, he's doing very well, right? So it's not about you have to leave your day job or any of that. It's you could find something that works, keep on executing. This one here, it's his style of buying. I learned it from him. I learned pullback buys relatively recent, well, within the past couple of years. And these are the kinds of results that you could get. But anyhow, right, it's not just about pullback buys. Today we're talking about midweek updates. So why am I still cautious even though there's a trade like this? And not just that one, but the other trades that I happen to be holding, right? NVIDIA, holding Birkenstock, and also holding VITL, right? All the stocks that I'm holding right now are up anywhere between 15 to more than 20%. So why would I be cautious in an environment like this? It goes back to what we saw in the prior screen. It all goes back to this right here. Track your setups. See how many, if all this was green, if all this were showing high quality setups, I'd be bullish. And I still am bullish, but I'm not where I'm ready to deploy more capital. If I come over to this other tab with my open trades, right? You can see, well, what trades I have open. NVIDIA, VITL, Burke, and TWST. And we come over here, and you can see 24%, 20%, 15%, 30% on NVIDIA. You can also see how invested I am right now. Only about 25% invested. The reason why is because the setups aren't there. And this is the type of environment where you could get chopped up. You could get chopped up because you need to be extremely selective. If You're trading in an environment where most setups are not working, right? Only 7 of the 20 some odd setups from the weekend have produced gains. Most of this is red. So if I'm trying to take, oh, well, this one's kind of okay, that one's pretty good, guess what's going to happen to me? I'm going to have some really nice gains in NVIDIA, in Twist, in Burke. And guess what's going to happen? My portfolio is going to go nowhere. Why? Because I'm busy picking garbage. Don't be a garbage picker. You have to buy quality and be patient. Be patient. Here's another tell. Something else that I keep track of. The new highs versus new lows. Every day I add these numbers to my spreadsheet. Yesterday, the new highs and new lows on the NYSE went negative. That means that more stocks are making new lows than new highs on both the NASDAQ and the NYSE. So, while it's possible for an index to tread water when that's happening, if you're getting this, it's an indication that at best you have chop, at worst the market's ready to take a tumble. Personally, I think that we're still in choppy waters. That doesn't mean don't trade. What it simply means is make sure you are selective. Because if you're not selective, maybe you end up with a 1% loss. Maybe you end up with a 9% loss. Maybe you end up with a 13% loss. Need to be selective. So that's my rant for today. Let me know what questions you guys have. Let's go through Instagram. I see a lot of people hopping on from Instagram. Welcome everybody. Welcome. Got a bunch of people over on YouTube too. And for those of you that are members, make yourself known. Make yourself known in the comments, because after this episode here, what we're going to do, we're going to head on over to Discord, and for all of you that are members, we're going to go deeper with whatever other questions or things that you want to discuss. But for right now, make yourself known. Ask the questions that you have, and that goes for everybody too. Joe is in the house. Welcome, Joe. All right, so and everybody too, member, not member, you're a part of this community and you're here, and I want to help you. So get your questions in. If you have feedback, post that too. And well, let's get the ball rolling here. We have about 15 minutes. Joe says, I've been watching MSTR. Do you have thoughts on how to enter? Well, let's go back to Trading View and let's pull up MSTR. MSTR. All right, so, oh boy, this one is a bit all over the place, isn't it? So, a few points on MSTR. Look at that. It has all my annotations already. So let's get rid of that last one there. All right. So you can see here that I have this cup with handle pattern outlined. There's a couple of problems with it though. Joe, you might know this from having been a member for a little bit now, but one of the things that I look for is tight reward to risk. Oh, my face is on a weird spot. Let's shift this a little bit. One of the things that I look for in every single trade is tight reward to risk. So even though you can find a clear spot to enter, right? Well, where we've got this dotted line right up here, that's where I would look to enter this. I would also want my stop to be placed below support. So if I've got to have my stop way down here, 18%, that obviously that's way too tight or way too loose, I should say, right? 18%, you could fit a bus in there. Too tight. Oh my goodness. Anyhow, 18% is too loose. So here's what I would do. And I did a similar thing on TWST, if you recall. Right now, MSTR is not a pullback, but here is what I did with TWST. Rather than setting a buy order, right? Rather than setting a working order to just say, oh, you know what? I'm going to buy here and hope for the best. What you could do is set an alert here, right? Just right click. If you're using TradingView and you're using these horizontal lines like I am, just right click on it and then create an alert. And then when price breaks through that level, see what's happening. Because what could be happening, right? Let's say that price opens up tomorrow over here and then breaks through. Well, guess what? If price does that, it's possible that you could have your stop below the day's low. And then rather than risking 18%, you would be risking 3%. This is where multi-time frame analysis comes into play. I always like to do multi-time frame analysis. So if we go down to a 30-minute chart, let's reset this. You can even see over here, right? There's a little bit of tightness developing up here. So let's get rid of this and let's draw a fresh entry and stop placement. Right there, that's about 5% between those levels. If price were to adhere to breaking out above this and maintaining a stop down there, that would be about 5%. Depending on how price breaks out, it might be an interesting trade. Something that I like to see when price is breaking out through an alert is heavy duty volume. I also like to check to see if the wind is at my back. So like with TWST, right? I'll use this example because this is a recent one that I took off of an alert. Right, so let's turn off all these annotations for a second. Let's come back here. Right, so I bought this right here as it triggered the alert. The reason why I went for this was because of this intraday support right around the 21 period moving average, and keyword here, and it also had the support of the group. There were other things that showed that the wind was in its sails. Right? It's not that this was perfect, but it had several things going for it. That's what I would look for in MSTR. I would look to see, does it have multiple things that are going for it before going for that particular trade? So I hope that helps, Joe. I had a couple of follow-up questions there. Let's see. I had some set up ideas this morning, but noticed the weak breadth. So I have been cautious. Yeah, if breadth is weak, then you're absolutely right to be cautious. Your next question, have your stop under today's low, you said for tomorrow's buy, potentially. Right, so there's two main ways that I like to enter. One we just spoke about, like well with TWST, right? Price was breaking through the pivot, and so it was reasonable for me to place a stop over here. But let's just say that that wasn't the case. Let's say that instead of opening just above the pivot, let's say that price was opening way up here. if price opens way up here, what does that do to my potential risk? Well, if I want to have a stop loss down here and price is opening up here, then this whole distance becomes my risk. Rather than if price is opening here, then it's just that level. That's my risk. Does that make sense? I hope that makes sense. At other times, all right, let's bring up BIRK. Right? BIRK was entered way back here. Right, well, where is it? Let's bring up the daily chart. This one was entered, I believe, on a working order. Let me double check. I want to bring up one that I entered on a working order. Yeah, this one was entered on a working order. The reason why I entered this one on a working order was because the distance between the entry and the stop worked across multiple time frames. When your entry and your stop works across multiple time frames, it gives you that confirmation. And then when you see that you have other things lining up for you, like the industry group, like the setup itself, then you're able to go and place a working order. And that's what I did on BIRK. Lots of I draw all over the chart, so turn off the annotations. But that's the point. You need to have the multi-time frame confluence to just place an order. If you don't have the multi-time frame confluence, but the setup still looks great, and you go and look and you find that, hey, there's some other stuff backing up this idea, then you can set an alert and then see how price opens. And then if the reward to risk is there, go for it. If not, then you let it go and you get on the next one. Let's see, well, what other questions do we have coming in? A lot of people saying hello in Instagram. Danny says that the analysis in gold. Let's take a look at gold. All right, so right now, gold consolidating right around the 50-day moving average. This actually looks pretty good. I always like to see tight price action. The reason why I like to see tight price action, it does so many things for us, right? One of the main things that it does is that it gives us a real clear spot where to enter, where to place our stop, and it helps us tighten up our risk. So where I would be looking to get in if I were to take this would be right around here, right around the 218 level. If price could get back above there and have a stop, maybe a stop below 215, right? Where you're only risking a couple of bucks there. Would I take this trade? I don't know. I need to do more work on it. But if I were to just to take a quick peek at what price is doing, yeah, I like this price action. Tightening up around the 50. The 50-day moving average is rising. All your longer term moving averages are all rising. It's a fairly solid pullback to the 50, and we'll see if it gets some lift. Now I'm curious. I want to see what it's looking like on a weekly chart. On the weekly, it looks pretty good too. All right, so this is a weekly chart. Each one of these bars represents a week's worth of price action. So you had this strong run up that started in February, and price ran 15%, 16%. And then between April and now, it's been moving sideways. So what are the odds the price just lifts off of here? Right? I wouldn't look for price to necessarily lift off of there, but if I'm trying to say, oh, you know what, I want to start a position in gold, I think that this is a halfway decent spot where risk is low, but I wouldn't be looking to have a super stock, right? Like I wouldn't be looking for the kind of action that we got in TWST where you're making 20% in a couple of days. This one, this is a bit of a slower mover. I think that this is a halfway decent spot. Your risk is very well defined in this one, Danny. What other questions do we have? Got 2 more minutes here. Michael, you need to start live more often. I am starting live more often, Riri. And so I'm doing live streams a few times a week. Most of the time, I'm streaming on the other platforms, right? On YouTube. YouTube's going to be the main one that I'm streaming on. I'm only streaming on Instagram once per week. So far, the reason why is because with Instagram, I like to stream like this, where you're streaming vertically. If I stream landscape, it doesn't look good on Instagram, and so it doesn't get the same kind of traction. But you could still find me on YouTube. So if you're not following me on YouTube, go over to YouTube, go to youtube.com/MarrowWealth. I'll type it into the chat over here, youtube.com/MarrowWealth. And then let's copy that, put that over there, and put this into the chat. So that way you have it on the other platforms too. That's going to be the main spot for you to go and tune into these live streams. Are you swing trading or day trading? I like to swing trade. That's my main thing, swing trading. All right, and Joe says that he has some more questions, but he'll follow up with me offline. Yeah, so Joe is one of our premium members. If you're interested in our premium service, again, you could go over to marrowwealth.com and there's information about it over there. Let's see if we could get one or two more questions here. Why do you not trade SPY? Why trade SPY when you could trade UPRO? UPRO is the leveraged ETF of the S&P 500, and this one I do trade. I do trade this, and I trade it when the setup is there and it's nice and tight. So with this, right, my annotations are still on this one. You can see where I entered and where I exited most of it, right? So turn off the annotations for a quick second so you could see things a little more clearly. So I entered UPRO back here, and let's zoom in a little bit more, have the thicker bars. So I entered UPRO right here. Just from this discussion, you probably know why, right? Price had pulled back to that red line, right? That red line is real important. That's the 50-day moving average. You want to pay attention to it. Price pulls back, and when price is consolidating around the 50-day moving average, it gives us another clear line in the sand. So if you have a clear line in the sand, that's something that's going to help you define your risk. So much about trading is about being able to define your risk. So if price is consolidating right around that 50-day moving average, You could draw a little box around it and say, oh, how much am I going to risk on this? Well, for me, it was risking only 2.3%. That's so tight as far as risk goes. It's hard to not take that trade. And so price ran up a little bit, ran up about 7% max. So, well, what is that? That's making about 3%, 3 times my risk. Took off that trade, took off most of it on the way up, took off the rest on this day over here, and then I haven't traded it again. And why not? Prices wide and loose. I'm not just going to take a trade because price is moving. I want to have the tight reward to risk. It takes discipline, patience, faith. It takes, and something else for me that it takes too, is knowing the stats, right? So it's not just this pie in the sky thing, not just something that I read somewhere, but actually going and doing the work myself to see that, yes, this actually does work and leads to a result that I'm interested in. That's the kind of stuff that I would hope that if you're serious about trading, that you would take away. That been beating this drum for a little while too. There's a lot of trading hobbyists, but there's not too many trading business owners. Be a trading business owner. Actually know what you're doing, what you're looking for, and then execute and run your trading like a business. Frost Fire 67, I see you there. Hello. We're getting ready to hop off, so if you have a question, get your question in. All right. Yeah, somebody earlier on Instagram asked if I have a YouTube channel. Sure do. Posted that in the chat earlier, so I think we got to that. Let's see. Any other questions? Any other questions? Doesn't look like it. All right. So there's no other questions. I want to say thank you all so much for joining us here live. If you want to follow up, post comments into the chat later on. I read all the comments on all the different platforms. So post your comments, get them in, and I'll do my best to answer your questions as best as I can. Take care, everybody. Much love. God bless.